The broadcast is now starting. All attendees are in listen-only mode.
TGIF Warriors. How's everyone doing? Hi, Zig, Bill, Tony. How are all my trading warrior brothers and sisters doing? Dollar weakness propelling S&Ps. Graveyard save in crude oil with a weak dollar. Hi, Nick. Spencer, how are you? So I'm looking at the 4-hour Dixie chart right here, hanging on by a thread. I believe we'll take out today's lows, most likely today. So I've been talking about for 2 weeks now that a breakout in the dollar, let's keep it here, was not as much of a layup as people thought. Even Charlie Brown thought we'd go to 97.80. So this descending triangle, we're right there trying to put in some type of false breakdown. I don't buy it. Okay, so just a simple target from this descending triangle is going to take you down to about 96.20. I actually think there's a chance before this, and this is a correction. I'm not calling this a major dollar top. I've been stressing this. This is a correction. It could have ended here. It could end here. My bias is that the grand prize is going to be down here after we take out the last of the dollar bulls. So Euro leading the way, stronger than cable, although cable's having a decent day. Crack through some moving averages here. Something I teach, we have a 2-week reversal. This week's off number was 112.17. So we're closing above the weekly close from 2 weeks ago. And now I think that if you are long, you have a pretty good demarcation line because this was resistance. Remember, I was talking about it being a range trade. If we took out this low, new lows were coming. And if we took out the ECB high, something was changing, and that's it. So in order for this rally to maintain its momentum, I wouldn't want to see it close back under 112.70-ish. Everyone with me? Okay, so with this going on, the double top in crude is being threatened. A lot of people wanted to call this a double top. The 4-hour will not confirm. See how it confirmed here? And this was a double top. So looking for crude shorts. I don't think I'm going to start today. I think I'll wait till next week. It's been my narrative that a lot of markets would blow off with a weak dollar. Crude being one of them, indexes being one. Peter yesterday was talking about 29.25 in S&Ps. Everyone enjoyed the interviews this week? Give me a why. You did, because I have another good one today. Designed for you guys. Okay, this is going to be designed for you guys. I have Adam coming here from Macro Hedged, and he wants to address the retail trader, which is what I am and what you are. And he's tired of seeing $5,000 and $10,000 accounts go in and just blow up. And as I said on Ziggy's tweet today, Ziggy does a great job announcing our webinars every day on Twitter. I said the difference between pros and amateurs are pros know how to lose, so they have money left to be right with. So I'm just taking a guess, but there's probably going to be a lot on risk management with Adam today. His other Twitter handle is @RealDollarFire. So hopefully we get some views on currencies with him as well. So the yen the other day, I was talking about how we might be carving out a right shoulder. It sure didn't give you much chance. You know, you had to buy it on a bad day. We're breaking out over this. I've debated with people many times whether or not head and shoulders could be continuation formations or reversal formations. And, this is not at the bottom, but sure looks like a head and shoulders to me, right? So right now we're closing over the neckline, and it actually projects, I think, 112.80. Okay. Oh, All right, Zig. And let's see, what else is there really to talk about? My thing this week has been selling rallies on dollar strength. Um, all the end crosses look pretty good. Um, Aussie yen, look at that. Risk on. Euro yen, risk on. S&Ps, non-confirmation. But just like the crude, I think next week could be the week. So unless there's a dramatic reversal in stock indexes, which I think would take a big move up in the dollar reversing course, it looks like some things are setting up for next week, mid-month. Hello, Hammond. So you know what I say on Fridays, right? Can anyone guess what your homework assignment is over the weekend? Yeah, only for happy hour today, ping pong. Well, you know what, Spencer, you could get a great explanation from here, right here. Okay, from the team. And you could get all the fundamentals gold that you want right here. Are you a subscriber, Spencer? Okay, so it'd be good to take that step this weekend because if the dollar is really changing the trend, markets are going to get active. And if this is just a head fake in euro and we're heading down, there's going to be a lot of shorts because that's going to mean risk off in a lot of different things. And you're going to get research from some of the best in the business. So, you could go to gold, right? And then you could get all the fundamental research here. You get the macro, you get Greg's view, you get all the explanations. To me, the whys, I would say if I had to give a why, it would probably be that yields went up this week. And, this is still a correction. You can't call this the beginning of a bear market in gold, right? So, I know a lot of people that are licking their chops, looking to get long down here, right around here. This is going to be the line in the sand. So, we could get a buying opportunity here. Again, a descending triangle, kind of like we have in the dollar. And you're right, it is unusual. But this whole advance that we had here, Spencer, in gold, the dollar wasn't weakening. Dollar just moved sideways. So some of the correlation, who knows, some central banks might need money. I mean, some of the countries that are having problems, like I think Turkey marked the low at 1160. So I think you have to trade the metals without paying that much attention to the correlation to the dollar because it really has not been correlated lately. Okay, I hope that helps. That help you? Okay. How you doing today, Blake? TGIF, my friend.
Thank God it is Friday.
I've been up for, I don't know, 3 hours already.
Oh my God, what are you doing getting up at 2 o'clock in the morning? You out there
I don't know.
trading some euros or something?
I don't know.
I hate that.
Sometimes when I wake up, I can't get back to sleep.
A very difficult time sometimes sleeping at it's on Thursday nights.
Yeah.
Aussie's just you guys got to be careful here. The Aussie, I know I sent a tweet out on the Aussie a little earlier. I am long Aussies from overnight. We are breaking out right now. And matter of fact, it's gonna start squeezing a little bit here, but take a look at the peso. All these moves are happening while we're here. But watch the peso. This is the chart of the day from 3 days ago. And I'm going to take you over to this chart here because this chart's going to be a little bit better. Let me get rid of this, if the RSI starts to break down, the peso starts to move lower. This is, all this is on the heels of better Chinese data overnight. The lending data was better. Trade data was better. Risk appetite stronger. JP Morgan's earnings were stronger this morning. When you have dollars, you want to put them to use. When dollars are used as a risk off tool, and when the markets are rallying, when equities are rallying, we see risk on, people reallocate those dollars to other things like, a higher yielding currency like the peso. We are at risk now, of really having a pretty seismic move lower in the dollar peso, especially if we get below this 1871, 1872 level. And it looks at risk now. And the reason why you're seeing this is because you got the euro, the dollar, and the euro's not moving up because Europe's great. Understand that the euro's not moving up because everything's good in Europe. Actually, Weidmann this morning said they're expecting slower growth in Germany. And you're seeing dollars reallocated into different places. You got the market that's extremely short euros at the moment. You got the market that's extremely short cable. You got the market that's short the Aussie. And, now you've got, stocks look like they might go to all-time highs. So if they go to all-time highs, you're going to get further dollar liquidation. Slap a Brexit deal in a couple of weeks and a China trade deal on top of that. We could see a dollar really come under some severe pressure. Am I in the camp that the dollar is going to hell in a handbasket? No, but I think it could, we could very easily see this wedge low and quite possibly even lower, depending on how far equities decide they want to stretch their gains. But you got to be careful here. Look, let's take a look at the pound, for example. The pound's in this wedge, and this is when you're looking at a wedge, this is what's called a bearish wedge. What that means is, there's a higher probability of a breakdown and a lesser probability of a break out to the upside. The reason why is you have lower highs and consistent lows. You can say consistent lows. Well, pretty much. You might be able to, argue that point with me, but regardless, the chances of a lower breakdown or a breakdown lower is a little higher than breaking to the upside. But that doesn't mean we can't break to the upside. And if we break to the upside here, we could really start to squeeze. Like I said, the market's short cable because of Brexit. The market's short euros, extremely long dollars. And the euro's squeezing the crap out of the market right now. If the euro gets back above like this 113.50, which is only 30 pips away, we could really see this start to cascade. I think the currencies we have to watch, though, is like the peso. The peso is really kind of showing us that the market is really in search of yield and really allocating dollars in different places. And I'll tell you what, the dollar peso has been extremely heavy. I have tried to trade this thing on the long side. I tried it this week. I failed miserably trying to be long the peso Wednesday night. Overnight, I got stopped out here. Then it looked like it was going to bounce, and I'm like, and I fell for it. So I bought it off of the support, and then I, put my stop at break even, and got stopped out. And I'm like, man, it's hard to fight this particular trend. Then with all this, good Chinese data, now we're seeing. Watch this cable, right? Finally scream past the 618. Watch the pound. If we break through, we don't have any data, guys. Now you're just kind of, you're stuck with Momo flows now. So watch the cable. If we break this 130, 120, we're right here. I mean, right here. We break this, you're going to start seeing stops just tripping. And all this gets to happen right as we're all sitting here live, which means that might have to, take advantage of some things here. So, and I do things over here. So just so you know that I've got my trade platforms right next screen over for JP Morgan. So, if I have to trade, I have to trade. So you guys understand that. So what was I just saying? So yeah, let's watch this cable. If it can squeeze past here, it's going to be big. The Aussie, this is a big deal. I think the Aussie could stretch its legs all the way up to like 172.60, which is, it'll make a higher high, but we still have a lot of resistance. Matter of fact, if you read this, this is a technical piece from, who is this, from JP Morgan? Oh yeah, JP Morgan. Here we go. You want to see where, what they're thinking. The market still seems to have great difficulties clear key resistance zone 71.95 and 72.27 to 36. So, if you're short the Aussie, that's, what JP Morgan's looking at. They're like, yeah, I'm not really worried about it until, I'm not really worried about it at this point until we get, above 72.25. So, I mean, you kind of visualize where that is. Well, it's above the 200-day moving average and really is up in this neighborhood, but that doesn't mean we can't go there. And that doesn't mean we can't, clear these levels, especially if we get above that 200-day moving average. We get above the 200-day moving average, you're really going to start to see some stops get tripped. And when we have a day like today where there's no real economic data, I mean, we got consumer sentiment coming out a little bit later, but when there's no real we don't have non-farm payrolls, we're past inflation data, you don't have any like economic data that's really going to move the needle, then you have to start looking at what I like to call the domino effect being one currency trips up another currency, or one asset class moves and it gives you kind of a knock-on effect. So for example, the Aussie dollar, let's say the Aussie starts trading towards the 200-day moving average, which is roughly 72 cents, which I think is a decent possibility today. We start testing the 72-cent level. Well, what do you think is going to happen with the euro? The euro is going to be like, anybody who's short the euro is going to be like, holy crap, here goes the Aussie squeezing the crap out of, the market. I'm stuck short the euro. I don't want to be short the euro anymore. Then they start, buying euros, covering their shorts. And then, anybody who's short the cable sees the euro start screaming higher and they're like, I don't want to be short the cable anymore. And we start getting above this trend line. Like, okay, I'm going to just move my stops here to 130, 150. Those start getting tripped. They start moving up. Then you get people that are long the dollar Canadian that are like, well, I'm long the dollar Canadian, but if it gets below 133, I don't want to be long anymore. And I'm going to move my stops up to 133. And then those get tripped. Then anybody who's long the peso goes, oh man, did you see the Canadian? Holy crap. And then crude oil's rallying. Well, and then I'm going to put my stops right here. Those get tripped. So you see it's a domino effect that can really build in the market when you have no economic data, but you have all these currencies that are near big inflection points. So this is really important to understand, especially on a day like today when you're like, look, dude, we've been range bound forever. We've been range bound forever. I can't get, it's not going anywhere. I'm just going to short the Aussie because we've been sitting in this range for like, 2 weeks. Well, then what gets in the traders' heads is, well, I've been short the Aussie, but this thing's squeezing. It's a Friday. How about if there's a trade deal that's announced over the weekend between China and the U.S., or some really positive comments like things are getting done? Well, screw that. I don't want to be short. And then that mentality starts to build into the market. So, guys, I think it's very dangerous. If you see the dollar and you're like, look at the dollar index. We're cracking below this 38% retracement. There's been a lot of people trying to buy down here. The last few days. This is a failed rally attempt we could see some lower levels, and like I said, we can start cascading into Friday. Doesn't mean that we're going to get some China news over the weekend. Doesn't mean that anything's going to happen. But look, you put yourself in the shoes of somebody who's on the other side of the market right now. That's the way I like to look at it. Is, all right, if you're short Aussies, how do you feel right now?
Love that, Blake. The pain trade.
Yeah. So think about that. Who's in the power position right now? I'm long Aussies from overnight. So I'm thinking, all right, if I was short Aussies, how would I be? I wouldn't be feeling too good right now. I'd be like, I don't know if I really want to be short anymore. And that's the approach, look, like I said, I was long dollar MEX yesterday, day before yesterday, right here. I was long, just trying to play. I was just trying to play this, longer term support down here. If I'm long and I'm seeing all of this happen in all these commodity currencies, you got crude oil ripping, you've got silver ripping, you've got stocks ripping. I'm long the dollar. I'm short pesos. I'm thinking, screw this, man. I don't want to be short pesos anymore. Screw this. I've got to get out of my position. So again, I just try to put myself in the shoes of somebody that might be on the other side of the market as me, and that helps me out. It helps me, A, stay in a trade when I'm in a trade, but B, also helps me think about what I want to do, moving forward into the rest of today. Like I said, it's Friday. No one wants to be short the stock market right now. Anybody who's long the dollar right now is thinking twice about that. You look at crude. If you're short crude, which crude doesn't really sell off on Fridays typically. Where's crude? Where is it? Oh, there it is. If you're short crude because you were like, oh look, whoops, let's take away yesterday really fast. Oh look, we rallied right into the resistance zone. Right into the resistance zone. There's a 618 retracement. We're rolling over. That's yesterday. We're rolling over. See that red candle? Then today you're like, oh man, screw that. These pullbacks are shallow. How about if we break through this? How about if this happens? This is what, anybody who's short crude is thinking. What if I'm short crude and then we start breaking out through, 65? Oh, screw that. I don't want to be short. Look at the dollar. Look at, this is a, just kind of a feeding cycle. It's like stocks, stocks continue to go up. Well, why did they go up? Well, there's buybacks, and then there's, everybody's chasing yield. No one wants to short the market. Everybody knows that this is just a ticking time bomb. We all know that. We all know that. We all know that the S&P is a ticking time bomb. The question is, do we go to 3,200 first before we go down, or do we go to 3,000 first before we go down? I don't know. But if I was short the equity markets, I'd be like, well, this ain't the time. And if I was thinking about shorting the equity markets, I'd be like, well, I don't think this is the time either. So again, be really careful, especially on a Friday. Things look squeeze-alicious. Look at this is another great chart. I'm sorry, I'm going to take away from Steve a little bit. We're above the 200-day moving average in the Aussie yen. We've been in a sideways trading range for the last 3 months. And everybody, let me say, when I say everybody, let me also say myself included, was thinking that we're going to revisit this level at some point. And I think we will. But I was thinking it around here. I was like, oh yeah, I'm gonna short the Aussie yen, up against. I thank God I didn't do it last night. But I was thinking, this week I'm like, yeah, I'm gonna short the Aussie yen. Just give me a good reason to short the Aussie yen. Give me something that looks good to short the Aussie yen. Is all I was thinking. Never showed up on my screens. Nothing that gave me that inclination that that's what I should be doing. But, and thank goodness it didn't, because now anybody who's short the Aussie yen thinking that this is we're going to be seeing down here sometime soon is now thinking, oh crap, maybe that was a really big stop run and now we're heading right back here. I don't want to be short anymore. Now we're above the 200-day moving average. Look at the euro yen above the 618. I'll let Steve dive into the other yen pairs because I know he's chomping at the bit. He's got a nice little pattern in play that he just put on. So I'm gonna leave it at that. But guys, it's dangerous out there. And for those of you that are, I'm gonna leave you with one last thing before I pass it over to Steve and Stelios, because everybody wants to hear Stelios' voice. Not so much Steve's voice, but everyone wants to hear Stelios' voice.
Very true.
Hey guys, one last thing. If you watch the Real Vision piece on Real Vision about the Aussie yen when it broke above, or Aussie New Zealand when it broke above 105, I have scaled out of majority of my Aussie New Zealand. When we got to 105.90, I thought we could get the 38% retracement at 106.22. We're here right now. Right now. That doesn't mean you should be shorting the Aussie New Zealand. It's just, if you're long, you've got to be a little careful because we're, kind of overbought, continue to be overbought. We can become more overboughter. That's one thing that we should all realize, that this RSI that's moving higher does not mean that the RSI cannot continue to move higher. We can become more overboughtness. I'm making up words right now, but that, you know what I'm trying to say. We could make it all the way to 200-day moving average without really blinking an eye. But if you are long, just, be careful. I think this is the place where you start moving your stops up. I am, just to protect profits. And that's when things start to run in our direction. You have to proactively move your stops to protect your profits, because profits are hard to come by. They have been hard to come by the last few months with the very tight trading ranges. But today, hey, if you thought you were going to leave early and go for an early lunch, go catch a round of golf, this might not be the day that you want to do that. This is the day you want to be in front of your computer, because we are seeing volatility in the currency market pick up today. So good luck, everybody. Steve, Stelios, how you guys doing today?
Good morning.
How have you been?
Morning, guys. Good. I'm just happy it's Friday. I'm sure most of you guys and gals are. So,
And also happy that things are moving as well.
that?
And also happy that things are moving in the markets.
Yeah, it's nice. It's nice to see. There was there's an increasing likelihood, in my opinion, that you have Brexit. And Simon so aptly pointed out in our chat room that that Parliament's on vacation for the next 2 weeks. There's a strong likelihood that Brexit gets done in the next couple of weeks and a China deal gets done. And I'm hoping, and I hope this all, maybe Dale can shed some light on all the moons will line up and all the stars in one place, and we will get a Brexit China deal at the same time within days of each other and get some sort of blow off top in the market. I would be so tickled pink if we could just do the S&P to 3,200, really fast, and then a reversal. It'd be epic. It would be so epic. I'm just hoping that happens. So let's all pray that, this all just happens all at the same time. Wouldn't that be nice?
Yeah, I was almost saying the same thing, Blake. Basically, what I was saying is that I don't like to see this slow drift higher in the markets. I would rather see, like a violent move to the upside, because that would make me, much more comfortable that, there's a big reversal coming.
I have to. I know everybody's hoping for a China deal. I know everybody's hoping Brexit gets done. Everybody's continues to buy stocks in hopes of all that. But let's not lose sight of the fact that the global economy is slowing. So when a China deal gets done, and I know I've told you guys this multiple times, and I'll say it again, and I'm long Aussies right now. When a deal gets done, I will be actively looking to short Australian dollars, actively in the market. I'm long Aussies right now, but I'm saying I will. The reason why is because the global growth is slowing. So once we get all of the good news out of the way, I will be then starting to look to go the other direction. And that's why I'm hoping we get some sort of S&P to 3,200 move, days following some sort of China trade deal. And then from there, I do want to start looking for going the other way, but not until then, guys. And until then, S&P looks like we're going to all-time highs. I mean, it does. I'm not long S&Ps. I'm long Aussies, but if I was short the S&P, I'd be scared, right?
Well, we have our green jackets on in honor of the Masters.
Yes, sir. It is
right.
I'll be watching some golf today. That's for sure.
So FX Masters, the dream team. We're not afraid of nothing.
All right, guys. Well, hey,
have a good weekend, man.
Yeah, I hope you guys all have a great day. Have a great interview, Dale and Steve.
Thanks.
And so I'm going to turn it over to you, gentlemen.
Thank you later, Blake.
Thanks, guys.
Oh, you guys talked at the same time. It's harmony, harmonizing.
Oh, exactly.
So yes, well, this is a day that we have no news coming out of the UK. It's actually funny because 2 days ago, when the extension agreement was announced, Donald Tusk of the EU said, we're going to do this, but please, UK, don't waste any time. And now they all bugger off for 2 weeks, which I found quite funny, actually. So nothing out of the UK. The interesting thing, well, actually, the only interesting thing overnight and from this morning, as far as I can see, is the China data that Blake mentioned. The Chinese trade balance was expected at 7 billion for a surplus of 7 billion for March. It came in at 32 billion, with exports screaming higher and imports crashing lower. So it looks like there may be a winner from this trade war, at least until this point. And that was actually quite interesting. And what else happened? Oh yeah, the other interesting number that came out was that China. Okay, of course, this is Chinese number, so you take it with a pinch of salt. But they apparently issued roughly 9% of the GDP in treasuries and credit in the first 3 months of 2019, which is an enormous number. And any way you look at it, pretty much all the major economies are generating, big deficits. They're inflating their debt and the money supply and credit supply at unprecedented pace. And the more I look at this with a long-term view, if I look at 5-10 years forward, what do I think I should be doing? Well, every time I come back to the same conclusion.
Making your own Ponzi scheme.
Yeah, that too. But really, in my view, I want to own real assets. I want to own things that you cannot inflate. So, and that includes equities as well. The major equity indices, they're all going to be going higher. End of story.
Not at current valuations, though. I agree.
Yes,
I agree with that premise. I mean, especially some of what we call defensive stocks. I mean, companies that have real assets, and quite a lot of real assets, have real value. There's no question about it. But isn't that already priced in, multiple times in the current valuations? Absolutely. So I do agree with you.
I don't disagree. I think in the short term, basically, my thesis is I want to be buying equity indices, not individual stocks, actually, because to buy individual stocks, you really need to do your research. You need to be on top of the sector, whatever you're looking at, and I'm not. So I want to be buying equity indices on dips. That's what I want to be doing. So if we go up to 3,200 and then have a proper dip down back to 23, 2,400, 2,500, I want to be buying there. So that's my view.
Companies that with low price in comparison to book value, under such an environment will always be a good long-term investment. I mean, quite stable, because as you said, there are real assets behind it. But what is definitely going up in the medium to long term is definitely commodities and assets like gold and silver under such an environment. That doesn't stop me from being still bearish gold in the short term. I mean, but that doesn't also change what's the macro thesis and the macro view about it. Okay, Stelios, so those are the things we had.
That's it. Yeah, it's been very quiet, my friend. I don't have that much more to say.
Ziggy says, "Do you mean buy things that hurt when you drop them on your foot?" Yeah, more or less.
Yes. real heavy assets as well.
Yeah, yeah, indeed. Okay, so I don't know where to begin. I actually, was in the chat room quite a lot today because there are things that are moving, and one of them is the USD yen, right? So starting from there, and you can see here the USD yen pushing higher, threatening to push above the previous highs there, is one of the things that's worth mentioning. Of course, this is not happening by accident. If you have a look at the 10-year treasuries, for example, we see that this was a corrective rebound. We talked about it yesterday, and we're pushing lower once again. We're currently at the 50% fib of the last move higher, the 200 daily moving average. We almost touched it today. If we pass below that, then the next stop is at the 61.8. So, yields are moving higher. USD yen is moving higher. And we've seen quite a few of noticeable movements in the yen pairs. I actually established a position in one of them, being long CAD yen. I'm going to explain the logic behind it. The logic behind it is that having a look at crude in the short term, it looks like it's consolidating. So it's probably on its way to 66 next. Before we see a bigger corrective move lower. And as you see here, CAD yen is breaking above. Now, there are several ways you want to view this. We had this conversation in the chat room earlier. Can an inverted head and shoulders formation be a continuation formation? There is debate about that. But even if you don't want to see this as a continuation pattern, as being an inverted head and shoulders formation, you can definitely see that we had a perfect ABC move lower, right? So a three-wave move lower, almost perfectly channeled. We broke above it. I mentioned yesterday and the day before yesterday that this consolidation here is it was definitely indicative that that it was a good bid under the market. We broke higher, and I jumped a little bit the gun here. I'm long since I'm 20 pips in the money, and I'm not looking for anything big. I'm looking for a retest of this previous high at 85.20, with my stop loss being below this. If you look at it as an inverted head and shoulders formation, below this right shoulders low, so just below 83. So it's a 2-to-1 risk-reward ratio, quite decent, especially seeing this move. I think in the short term, we can easily fulfill, this, target, and, doesn't really matter what happens after that. I mean, as I said, this is not like a long-term trade for me. I was looking to gain some exposure in FX as well, and this is one of the reasons why I'm also looking to short USD Swiss for the same reason here, because USD Swiss, I told you since many days ago, it looks, as a decent opportunity to me, and this rebound higher looks corrective to me. I want to see it break below this confluence of supports at parity. If that happens today, I think I'm going to gain some exposure here as well, having to do with FX. Of course, what does this mean for the DXY? That means that the DXY, as you see here, it's breaking below this channel. The DXY can remain, range bound for longer. I mean, it can remain bullish in the medium term, but at the same time, we can see a move down towards 96 without breaking the sequence of higher lows. So you can even see this as almost like a head and shoulders formation. So we're breaking below this 38.2 and this trend line. So we might see continuation lower for the DXY. And as I said, that doesn't mean that the DXY has to really turn bearish, because I'm not looking for any big moves. A move down to 96 should suffice it in this case. Now, having to do with other yen pairs, here is the Kiwi yen breaking above this little triangular formation here. Aussie yen, no need to say much, but because Blake mentioned it, but this move higher, to answer to what Blake was thinking, can easily prove to be corrective, like, an A, triangle B, C to the upside. Okay. The break to the upside was quite clear. Once we cleared that confluence of the horizontal resistance area and the trend line, that was a good opportunity. And you can see that at the same time, which often happens, we had a break from this resistance trend line for the RSI, right? So we might see something, like, okay, let's not make it permanent. So this is what I was talking about, like one move higher, consolidation, another move higher, perhaps a move towards, 84 before lower. And that would also coincide with what Blake mentioned. Like, he said, I would love to see a China trade deal so I can then short the Aussie. So perhaps we're going to, keep appreciating here. We're going to get a spike higher following a China trade deal, and then we're going to fail somewhere there. So, this goes well with, a medium-term, macro thesis on how things might evolve. So, yeah, I do like this trade to the upside. It looks quite nice. At the same time, I mentioned that yesterday as well. The Aussie, the S&P, since it's really just, slowly appreciating, looks good for another move towards the all-time highs, for some kind of a spike or whatever. This is actually one of the reasons why, in order for me to hedge my position, I actually bought early on the day. I bought the DAX and I bought the FTSE as well. Less of the FTSE, more of the DAX, because I was monitoring this bull flag. And once I saw today, reversing from the earlier lows and penetrating through it, I just bought the DAX and looking for a move towards a 161.8% extension. So today I was quite active in the market. I mean, I've gained myself some nice exposure here and there. Obviously, I forgot to mention it about the Kiwi yen. You remember I was mentioning the past few days that I didn't like the fact that the Kiwi yen was not moving to the downside, and I said yesterday that I would put a stop loss above 75.20. I did that, yesterday, and I actually got stopped out for like 65, 67 pips of profit. Sometimes you need to, to listen to the market and see what's happening. So, I had a nice entry for this one. But, sometimes seeing the inability of the pair to move in your direction is a warning sign on itself. So, at least, me being proactive here, got me a little of a profit instead of, threatening of go back in a loss. Okay, so I don't have a position anymore in the Kiwi yen. It was a small profit for me, better than a loss. Now I still have, of course, my 1/3 remaining, actually a little bit more than 1/3 of my gold short, and in the short term, this looks to me like another little bear flag. So I do think that a retest of 1280 looks very likely, especially consider that today we're seeing dollar being under pressure. Despite that, gold is at the lows. Okay, and that's a good sign for me. I mean, the fact that gold is not catching a bid, despite that, is a good sign. Now, copper is having a nice day today, but as I said the other day, I don't even know how to draw this formation anymore. It's a little bit abysmal. Perhaps it's something like this. Perhaps you can even view it as a triangle or whatever. Regardless, I still believe we can see higher prices in copper, but we need to get to clear above like 298. Okay. Also, what's this RSI trend line? We're threatening to break above it now. So copper, obviously, good day following the Chinese data. No surprise there. We might finally see a continuation higher from that to complete some upside targets. Can you look at copper? Oh, I actually just saw your question, Elena, but it doesn't matter. I had already covered it. Okay, now that the bunds reversing, they can stop the pumping. Konstantinos says, looks like inverted head and shoulders on daily. Yep. Hey, Steve, thoughts on euro pound, please? Sure, let's have a look at the euro pound. Let's have a look at it on the 4-hour chart to begin with. It's a little bit mixed, as you see. I mean, I still believe that this might be something like a, it looks very nicely as a diamond formation, but which, is a nice reversal formation. It can also be continuation formation, by the way, but especially as reversal formations, they do statistically very well. But I can't say that we've had a breakout because, as you see, there is still no real movement. I mean, there's just choppiness here in this market. So I think we need to be more careful. This is definitely a period of consolidation. I think that when it gets unstuck, we're going to know it because it should accelerate one way or another, and that then it might be an interesting trade. I would want to see some kind of an acceleration to the upside because in that case, I would expect at least a retest of this 88.40 area. So at least a retest of this last bearish leg that brought us within this consolidation. Until then, I think there are better opportunities out there. I mean, the pair has been in this consolidation since end of February, and we're in the middle of April. So it's already like 1.5 months that the pair hasn't been doing anything but being so. I would actually abstain from investing any capital there. I would refrain. I mean, okay. Enough with that. Still always good analysis based on facts and not on investment banks and full of ifs. Yep, I agree. Costa, he's always, he always has a clear point of view. Euro Kiwi. Okay, let's have a look at the crosses, Euro Aussie. Okay, Euro Aussie. Euro Aussie, I was viewing this as like a possible three-wave move, like 1, 2, and another one to the downside. But as with the Kiwi yen, I don't like the fact that we haven't had, after breaking below this channel, we haven't had any acceleration to the downside. Of course, as long as we remain below, like let's say 159, if I had to be anything, I would be short. There's no question about it. But keep in mind that this might also be some kind of rectangle because, as you see, we already had, lows here. So this might not be a channel. This might be something like this. Okay, so another type of formation, or something like this. Rectangle. In any case, a break below, 157.20 will definitely be, a very bearish development, and it should produce continuation to the downside. I can tell you that much. Now, having to do with the key Euro Kiwi still doing very nicely to the upside. I mean, we broke above this descending channel, and since we've been doing that, we either see bullish momentum or consolidation in the form of bull flags. So so far so good. We're seeing another pullback here, but keep in mind 167 is now support. So as long as we remain above 167, I think it's a decent possibility that we're gonna find and catch a bid again and move to the next objective, which is the 168.50. 61.8% fib, from the last move lower. So I think that Euro Kiwi looks, decent to the upside until proven otherwise. Let's have a look at Pound Aussie and Pound Kiwi as well. Here's the Pound Aussie. Pound Aussie, I was viewing this as a diamond formation. And, as you see, we've broken below that. We've retested it. So, I have no reason not to have a bearish bias. On the other hand, I can tell you that I don't like the fact that there is not more momentum here. There's this trend line that I'm monitoring. I'm hoping that if we break below it, we should see continuation lower. But I wouldn't rule out the possibility that this whole thing is a corrective formation and there is more upside coming from there. So, the fact that I cannot decipher this price action so easily is what keeps me away from trading these pairs at the moment. And this is pound kiwi. As you see, pound kiwi knocking the door of this trend line resistance again and again and again and again and again. But we haven't managed to break above it. There's no question about it, though. If we do break above 195, we should see continuation to the upside because, there is, that many times that, you can keep on knocking on the same door. At some point, it's going to open. And if that happens, we should see continuation higher. The RSI profile as well here, doesn't feel like it's bearish in any way. Actually, it looks like it's consolidating after a move higher, and perhaps another move higher is going to follow. Now, if I had to do something right here, right now, obviously that would be being short against this trend line, right? Because from a risk reward perspective, it's a good offer, let's say. But on the other hand, as I said, it looks to me more likely that it's going to break to the upside. So it depends on what you want to do. If you like it to the long side, wait for a breakout and buy it. If you don't like it to the upside, you can sell it here, place a stop above these highs, and you have yourself a good risk reward opportunity. Because if we get rejected from here, there is absolutely no reason why we can't move back down towards 191, even 190, right? So from a risk reward perspective, it's an amazing opportunity. If you like it to the downside, as I mentioned before. Do you think more movement up in the Aussie yen? Yeah, absolutely. I mean, the upside momentum is quite nice at the moment. Now, of course, that's a different question with the question, would I be buying it here? No, I wouldn't, because where would I put my stop loss, right? But if you're asking me if I would be buying it if it does something like this, I mean, if it comes back to retest these highs, let's say at 79.80, yeah, why not? I would. Okay, so I think that Aussie yen, at least in the short to medium term, is should be viewed as buying the dips opportunity than anything else. ForexAnalytix says futures up today. Yes, as it seems today is going to be a good day for stocks, and unless we get something. I mean, all the indices that I'm monitoring are higher on the day. Some of them more, some of them less, but all of them are acting very nicely. Even the VIX is confirming this move by being almost 5% lower. Having a 12 handle now. You can see it here. Retesting once again this trend line support, but at least confirming the move higher. So since we had new lows just a while ago. So yeah, I mean, everything is confirming that this might end up being quite a nice day for stocks, and we might close another week near the highs. I mean, no real surprise there. We've seen that. We've seen the same movie many times, right?
Groundhog Day.
Groundhog Day, yeah, you can say that again. So, by the way, if we have any more questions, just keep on sending them. Coach, do we have an interview today?
We do, and he's here.
Who? Oh,
Adam.
Okay.
Adam from at Macro Hedged at Real Dollar Fire. He wants to address some things for smaller retail traders. So looking forward to it.
Okay, sure. Let me see if we have any more questions, and then you can go ahead and start. I have a question about the FTSE. Now, the thing about the FTSE here is the following. I do view this as a bull flag for the time being. I am a little bit cautious because we had that trend line here, but it looks to me like it's very likely that it's going to retest this horizontal resistance area, or even the 78.6 at 76.12. So FTSE looks very decent to me at current juncture. Even the move lower in the RSI looks corrective than anything else. Okay. I think I've addressed all the questions, Coach. So go ahead and start your interview.
Okay, buddy. Have a great weekend, Steve. Thank you for all your
Either.
hard work.
Everybody have a nice weekend, and I'll see you on Monday.
Okay, bro. Adam, looking forward to having our discussion today. So I'm making you the presenter. Looking forward to seeing your screen and hearing your voice, and welcome to Face, Adam. Adam at Macro Hedged joining us here in Face.
He's unmuted,
Okay.
but we can't hear him or see him.
Can't hear you. You'll have a drop-down menu, Adam, for your mic, as well as
Yeah, there's
screen
an
share.
audio. There's an audio tab. You can select your microphone there because
Can you guys hear me okay?
Yeah, we can hear you. We can hear you just fine.
Cool.
Now you can use your show screen button under the tab called Sharing to choose which screen you want to share.
Yeah, I've done that already. You should be able to see my screen. Can you see it
No.
coming up?
Not yet.
Oh, hold on. Let me just try it now.
At least we can hear you, so that's a first good step.
That's good. No, I've definitely marked one application that you should be able to see.
Yeah,
There we go.
Now we can see you. Yeah. Perfect.
All right.
Okay, Adam. Thank you, Steve. Adam, great to meet you.
Great to meet you too.
Really appreciate you taking time out of the dollar sell-off today to talk to us. And looks like you prepared a PowerPoint, and I'm very much looking forward to what you have to say, because you wanted to do something a little bit different. Before we get to your PowerPoint, though, Adam, can you tell us a little bit about your trading journey and how you got involved in the business early on?
Yeah, sure, no problem at all. So I've kind of done a slide for that as well. So I've been trading since 1994. My first job was on the live floor. I worked for a Bundab desk, and then I moved over to Goldman Sachs about a year after that. I was there till 2004, so just shy of 10 years. I moved over to the FX space, where I was on the options desk during some kind of pretty hectic times. It was just after Soros had the pound had come out of the ERM.
Oh, cool.
And all. Yeah, so it was crazy times. So I over a period of time, I've spent my time over on the options side. So I came off the spot FX and was running the yen straight vanilla options desk for a couple of years, and then moved over to the exotics. This was at a time, late 90s, early 2000s, when all the exotics were really kind of kicking off, and everybody wanted to be trading those. And there was no set price. You could kind of make a number, and the desk made a lot of money. What
do you think of this, Adam? Options are like relationships. 90% of them expire worthless.
Yeah, but unfortunately, the 10% that don't, absolutely.
You got to go for them. Yeah, I agree with you. Okay, so were you more of an option writer or an option buyer, or use a lot of different strategies on the desk, condors and all those exotic type strategies?
We were an interbank desk that just we were trading
executed.
Okay. Well, no, we traded everything. I mean, my desk at the time ran the world's largest yen book. In 2001, we made 840 million on the desk. In 2002, over 600 million. So the yen desk, alongside at the time the dollar mark desk and the sterling desk, we were the largest OTC options books on earth. And we had. It's everything.
Refreshing to hear the word Deutschmark.
Yeah, I mean, this was pre Euro, so
yeah.
I left there in 2000.
Will we have another Deutschmark post Euro?
I guess. I mean, you know what? I think there's so much willing and there's so much might behind holding it together. If the European Union does fall apart, which I kind of can't see it happening, without any kind of major, political war unrest. There's too much invested in it, so no is the quick answer.
Okay. All right, buddy. So great background. You're blessed to start off there, compared to, and I think that's kind of the motivation behind what you want to talk about is in those days, and you're a young guy compared to me, you had places to go to work. You had trading floors, you had trading desks, and everything has been hollowed out by the internet and online executions, etc. People today really have to have a great sense of discernment when they're out there trying to learn how to trade. Don't you agree?
Oh, I think it's a really good point, actually, that Adele. I think it's so strange. I come from I'm 42, but and Goldman said to me, "Oh, you can't work here without a degree." So I had to kind of work full time and get a degree at the same time. It was a time when everyone did a grounding in a bank, or everyone did a grounding in a fairly large house. It could have been Dean Witter, it could have been any of the big funds, but you that's where you did your grounding, and then usually regulation, because you've kind of got an idea you want to do something slightly different, or regulation changes. So you find that a lot of the guys running desks at Deutsche, running desks at Barclays, went off and have now become part of the big non-bank liquidity providers. So you hear names like GSA, Finex, all of those guys. They were ex-traders that the banks have kind of gone, look, we can't do this anymore, because regulation said we're not allowed to, both sides of the coin, and they've gone off and become non-bank liquidity, and they then have facilitated more and more and more of this hollowed out world where people don't have that connection anymore to kind of. I mean, there's some downsides
to people.
Yeah. So
Human
they're staring. They're staring at charts, or there's a very different. What the chart says and what the price says is kind of become this new religion. Whereas before it was, I could talk to you on the desk and you go, nah, if they come in selling, I'm taking them.
Right.
And you would then go speak to your buddies, and then we would, someone in London would say, look, I've got a big order to go, and someone in New York would say, well, I can take it off you, we'll keep it off the market, and that's how it was done. And now that's all hollowed out.
Yeah, but that's why social trading and having a community and masterminding with great traders nowadays is even more significant. And I really am a big believer and proponent of communities. And we only have two eyes, and you put together and attract good traders into your community. You could walk in without having an idea, and by the time Blake and Steve and the other guys are through talking, I have many compelling things to consider. So big believer in that.
Yeah, it's and the kind of price isolation. I mean, I've got views about technical analysis where I feel it's become, in a way, a means sometimes of just bringing in, people. You can remove a view and remove a community by giving them a chart and then some tools around that chart. And I think that's the bit that's been really hollowed out. There's really good things that go on in technical analysis. There's really good things that go on in price study. But I think the isolation, because where people are trying to make it simple, put it on a mobile phone and get people to trade more, though, exactly as you've just said, that community, that block together has just been snapped.
Okay. So how are we going to serve this community today? I know you wanted to address the smaller retail trader, and you've grown weary of reading and hearing all the stories of people just blowing up these $5,000 and $10,000 accounts, which I have done. And, sometimes, and not sometimes, all the time, Adam, in my view, we learn the most from our mistakes. So, but if we could help others, having already made the mistake, avoid the landmines we've already stepped on, I think we're providing a great service and helping people avoid the pain that we've already gone through. So what do you have? What do you have for us?
Yeah, I think, that's good. So, I mean, if I tab through some of the, start moving kind of through what we're doing, if I go through, some of this might get really boring and dull, and you can just say, canter on a bit quicker, so that's fine. But So what, for me, I think everyone's still got to make some mistakes. And,
Yes.
When I kind of did the release with the guys at Macrodisiac about the cost of trading, and a lot of people said, yeah, I feel like, some people said, I feel like it doesn't matter yet because I'm still trying to do some learning. I don't really care about the true cost because I'm trying to get my head around it. But then there's a lot of people that have already stepped on a few smaller landmines, but they were kind of saying, wow, that's really, really interesting. I think understanding that journey of where people are, or understanding where you are on the journey as a person within the trading side is really, really important. We lack that. And hopefully I'll go through this stuff of what we're trying to do. I'll talk a bit about macro hedge, talk a bit about some things that are completely different. Please stop me constantly to make sure, you're clear and any listeners are clear as well. So I will counter through at a pace, and you can say, hold on, or you can say, go quicker. Okay, so let's start.
Promise.
Good, man. Don't let me disappear away. So, so the agenda, kind of who am I, what's macro hedged, what's our roadmap, some different ways of looking at trading, and a live trade we did 72 hours ago, which I will walk everyone through. Okay, so I set up macro hedged with Hugh because kind of big reasons around it were just really a frustration of people either kind of believing in this really crazy dream, or, oh, if I could do a few trades while I'm doing my job, I can get rich. That's not the case. And secondly, I've got a massive problem with the deleting of trades people have done that have not gone well for them. And so we really did it kind of out of the basis of being as transparent as possible. And we might get completely mullered and lose money this year, but we're posting up everything we do, telling all of our customers, and we're trying to keep us... we're not trying to. We are being as transparent as we possibly can, even to the point where we make sure all of our alerts go to our customers before we enter the trade.
Wow. Well, good for you, buddy.
Well,
yeah.
It was painful a few days ago. I must admit.
I kind of share the same thing about revisionists who don't mention things. I mean, isn't it cathartic to say I was wrong?
Oh, it is.
You never hear that on Twitter. I don't know, and I was wrong. Do you see that on Twitter?
Yeah, you never do. Everyone's right all the time. And what scares me is people believe it. I love writing something where we're actually wrong and why we were wrong, and we actually get more feedback from people saying, "Yeah, I understand why you got that wrong. I understand. We were part of that as well, but kind of." The theory was right. We kept the risk to a minimum. That's good. It's okay
because it's authentic.
Yeah, exactly. So we've been running macro hedge options since the beginning of the year. That is, there's a lot of detail around the strategy. I'll talk about that later. We put a trade idea out. We do it. We make sure the email goes out to everybody. As soon as we got confirmation from MailChimp it's gone out, we'll pile in and do the trade as well. I broke my heart a few days ago with ES, the S&P 500. I saw the trade happening in front of my eyes, but couldn't press send quick enough. And then after about a month or two, we were asked by a lot of traders saying, well, I love it, just too much information. Just give us the directional turning points, which is a different service, which is just completely buy, sell, here's the stop loss, cut out. So I'll show you how.
You know why? They're lazy. They just want money to pour into their account. And, and they say they're self-directed, but, everyone who tries to sell the secret of trading, the secret is it's hard work, living through adversity and persevering.
Yeah, I mean, I've been doing this 24 years, and Hugh and I still work 12, 14 hours a day, and people kind of do these pictures sitting on beaches. It's hard. It's a hard job. And, someone said to me, and it's the truest story, is this is the only job in the world where you can't turn up and just be average. You've got to be at Usain Bolt world record pace just to stay in competitive mode. You can't have an off day. You can't have a hangover. You can't be ill that day. Oh, I don't really fancy coming up to work, or I won't fix so many bathrooms today because I'm feeling terrible. Every day you've got to be Usain Bolt at world record 100-meter pace.
Well, what about when you don't feel good? Isn't it okay when you're not in a peak performing state to do nothing?
Yeah, but because that's 100%, since we set this up, just to share a personal feeling that I have, is I spend my life kind of thinking, shit, have I not put enough stuff out to people? But then I sit back and think, I wouldn't be doing this now. But there is this weird pressure in the market that you feel like you've always got to be doing something. And we lost some customers and we've made really great money. And a couple of guys unsubscribed. And I said, oh, what's going on? And they said, oh, not enough trades in the day for us.
Yeah.
What?
Can't please all the people all the time, Adam. You just
you can't. But it's really interesting what you say.
You know what I say? Like, for example, like right now, you're a competitor. I mean, let's call it what it is. You're here. I'm giving you visibility. People could sign up with you, and we don't have any issue with that, because if people want to go somewhere else, and you could do a lot of intelligence gathering with a lot of different services, they need to have a different experience. So it's okay. So we're here to help the general FX community as much as we can, and we do it for free here and bring in guys like you to edify them. So so don't worry about the revolving door. The key in the business is to slow down the revolutions, but it will always revolve, right, bro?
Yeah, it is. It's always revolving. It's just
the search for the Holy Grail for some people is like Don Quixote; it never ends.
Yeah, I think my frustration kind of sometimes is just it's the laziness, and we're in an industry where everything is you're up against guys that have got a 3.9 plus GPA that have been to MIT, that are working in 5 or 6 different funds, that have got unlimited budgets. And for us, for whether it's my role market making options, or my role trying to correctly predict flow for the customers on macro hedged, I've got to be at my best game, because I know those guys are already better than me. So if you're kind of further down that chain, you've got to be fitter, sharper, more mentally. There's more work to do, not less. And that's I'm glad you appreciate that. And that's it's just, if we can remove that laziness from traders, wow, the trading world would be a much better place. But anyway, we digress. I shall keep going.
Okay.
All right. So what I've got up now is our roadmap. A bit of a plug about what's coming in the future. So we've got a crypto skew platform we're going to be released, so that we can start to see. This is totally unique. We're using our options models to predict when the turning points in any of the cryptos will be coming out. I'm not a big fan of cryptos myself, but this is really good. We're building a genuine turning point sentiment analysis of Twitter as well. So it's not like all the usual stuff where people are talking about levels. We've got some really good secret source from a guy that we used to do some development in Belgium. We're going to do an institutional only piece. One of the things we've had, which is quite a funny story, is institutions and trading desks have come to us and said, we want to use it. We've seen what you've been doing, but it's just too cheap. Can we buy it for 2 years in a block? Because we can't spend that little on a card. So we're going to do an institutional service. We're going to do a macro moneymaker newsletter for traders, purely for FX and futures traders, so that each week they get something that they can print out, have on their desk on a Monday. These are the things that you need to be looking at. These are the key turning points in the options market. These are the kind of key levels. I've got a few slides where I walk through that. We're going to be embedding completely with Quick Strike, who, if you trade FX, if you trade futures, those guys are, in my opinion, are second to none in their data quality. So next slide. We kind of talked about this before, is why am I wasting my time with this? I get asked by a lot of people, why am I charging $30 for something and wasting my time with retail? And we talked about this earlier, Dale, where it really, for me, it's just trying to be as transparent as we can, be as open as we can. I know you guys are doing the same thing, and trying to put forward that this is a really hard job. This is not a get rich quick scheme. This is going to take you way longer. When somebody cancelled saying, oh, you've only made 10% in a month, I need to make 100% because I'm trading full time. I mean, just my head explodes with that stuff, but I have to remain calm. So that's kind of why we're doing it. We have got a lot of people in the background that are doing things. I'm not, I'm kind of still running a market making business, which it takes up a lot of my time, but we've got people in the background that are helping coding stuff. Another big question, which people can press, we won't dwell on this, but people can press pause on this when they want to review it later. Who are we using? Why do we use them? What are the platforms we use? For me, making sure your costs are as low as possible and who you're consuming with is really important. I mean, maybe we can come back and talk at another time about kind of, FX aggregation, ECNs, and making sure you guys are getting the best possible fill. I love that stuff. I love all that technical stuff.
I've interviewed the guys from Trading Technologies.
Yeah.
Okay.
Have I ever interviewed him, or have you?
I have.
You have, yeah. So we use TT a lot for all the futures side. The FX side, we use LMAX and FXall, which is the old Reuters product.
You're my 1,082nd interview.
Wow. 1,082. Wow. Oh my gosh, that is a lot of interviews.
Yeah. I enjoy it.
Have you ever interviewed the guys from Market Factory?
Market Factory, no.
Yeah, so Market Factory, purely all they do, they are, I mean, I'm not sure how much benefit it is for the retail, but Market Factory are 100%, all they do is they're an aggregator of all of the providers, all of the interbank providers, the ECNs, they stitch it all together. So they are the epicenter of the FX market globally. They've got all the interconnects into all the major backbones. I think it would be nice to talk to them if you ever can get them on. They're based out of New York. It'll be interesting, kind of really enlightening to anyone trading pure FX, just to see how their flow, how their orders are really rooted. So anyway, I didn't want to dwell on that slide, so there we go. Okay, so what the kind of content we want to talk about is going through, obviously for us, we see it's very common for retail traders to focus on price. It's the main thing they're taught. It's technical analysis is what everyone looks at, all of those concepts. And then you start to look at kind of the derivatives of those technical analysis, so the kind of indicators, anything from moving average, MACD, RSI, all the usual kind of methods of analysis. And today I just want to talk about something else, so which is what we do, how we do it. Hopefully it's beneficial. Hopefully some people will just go, what the heck is this? But I'll fire through anyway. So what we were just going to look at here is just looking at methods of gauging participant positioning. That's actually something that's quite hard in FX because obviously it's an over-the-counter market, not an exchange market. But we've got the CFTC report, risk reversal skew, which is what's used more by the big players, and put call ratios as well. So first one, obviously the CFTC report. It's free. It's delayed data. A lot of big funds now play it and game it a little bit because they'll adjust their positions knowing it's coming out. It takes time and effort to understand what each parts are doing and to the breakup of it. The options data doesn't always take into account the options delta, which is a big thing. So people say everyone's kind of max short euros, and then you look at the options side, and they're actually carrying a huge amount of long puts, and they could all be delta hedge, which is offsetting on the cash side. So there's some real obscurities, and one thing that's quite interesting is one option contract counts the same as one long position in the future, but the option itself. So me and you could go and buy a 1 delta, 10,000 1 delta options, has the same weighting in the report as if we went and bought 10,000 50 delta options.
Interesting.
It's crazy.
Yeah.
Not many people know that.
No, I didn't know that.
Yeah, so we do a CFTC report, which we pump out free to everybody. Anyone listening to the call, welcome to sign up. It's free.macrohedge.com. It's taken we've got all the instructions and the detail as to how we come about with this report, and it just gives a Z-score and a current week on week. So you start to see a bigger picture of what's going on rather than the immediate. Some of these funds can't shift that quick. So this gives that picture where we can start to see the flow a little bit more.
Okay.
Next one is the risk reversal. So if I got a slide where I'll talk about, yeah, I have. Okay. So what's a risk reversal? So this is cable skew. So what we've got here is the little dot in the middle is the at the money. And you'll notice that as we move, if cable moved up, we would expect the volatility. This is volatility on the axis. We would expect volatility to move down. And if cable dropped dramatically, you can see that the tail lifts, the puts lift. So that gives us, if we do this by delta, which is the next slide, you can see a 20 delta call on the right side is a much cheaper volatility than a 20 delta put. So the risk reversal is simply the selling or the buying of the put and the buying or the selling of the call at the same deltas, which gives us this chart here, which is also known as the risk reversal skew. So you can see over a period of time of February through March through April what the cable pound against the dollar skew has done. And you can see
how these turning point signals where you're financing the directionality by writing something against what you're buying.
Yes, well, we trade the skew fully delta neutral. So if we trade a 20 delta risk reversal, if you sell the put and buy the call, you've got 40 deltas exposure. We'd immediately, so if we kept this simple on 10 contracts or 10 million, we would immediately put an offset transaction of 4 contracts or 4 million. Okay. We're not interested in, it's a great question because a lot of people use them at turning points to maximize their financing of the position. So it gives them kind of double bubble. So, right. And I'll work through
double trouble.
Yeah. Right. So if we look, if we look here, on the blue line here, I'm not sure if my mouse is highlighted at all or not, but because we can do this.
I can see it. Yes.
I'm going to pin this arrow here so you guys can see it. So you'll see. Oh, I didn't do that very well. There we go. So this arrow.
Yeah. You'll
see that the puts have slowly, as time's gone on over through February into March, that the puts have slowly become more and more expensive, less and less value. And then we've had this big drop here in the yellow of the sterling's dropped off, and the risk reversal just blown out to 4%. And at that point, because of that blowout, it's so far out of value that you would find 2 things occur. The guys looking for the pure trade play is doing what you just said, which is let's use a synthetic position to get into a long right now, okay, and not hedge it. So they're going to get the volatility gain in their direction and the price of the future or the long spot position go in their favor. So they would have in this case 3% gain in volatility and the cable's gone in their favor as well. So a lot of people do this. We tend to protect the customer by saying hedge at this point, and we're just looking for that 3% gain in volatility, where you see that's gone from the low in around the 20th of March to where it is now, where calls are starting to come back in, and it's just a 1%. So, that's a 3% fairly risk-free play in the risk reversal, which also just, it tends to really show when things are overdone. And if you're on a daily FX trader, you want to be looking at those extremes because that's where the real money is shifting things.
Got it.
Okay, next slide. So our models kind of are looking at a lot of things all the time. This is S&P 500, so you can see that we're looking at intraday volume and contracts. If you look here on this right-hand side one, this is actually the straddles. So it's the cost of buying a put and buying a call at the same time. And you'll notice this little the dotted blue line on the right-hand side is starting to fall away, as quite possibly this move up to 29.20, 29.30 could really fade off quite heavily as people are happy to sell pretty hard straddles into that area. So you can also look at what's happening in the volume. The one at the bottom right-hand corner, I took this live before we went on. You can start to see now, or they're very cheaply buying up all these puts that are down here. And this is the yellow bars. So our models are looking at that all the time, and that's how we kind of generate our signals, which go out to the customers. We're looking at all of those alerts, all of those metrics at any time. And when we start to see these things outside of any boundary, that's when we're letting our customers know. And it's just really for them on the directional side. It's a very simple. All the research is taken out. We're just spitting out what the model's doing, and giving them a trade that's going to hopefully, continue to make them some yield. But over a period, we are getting asked a lot. Can you put some more narrative to it, so that we can understand what it is you're doing? At the moment, we feel really we're not sure yet how to represent that to everybody. So we thought about a weekly update, a newsletter that we could send out so everyone could kind of say, "Oh, this is maybe a standard deviation away. This euro move could continue. This dollar move could fade around here," and give them that color. And we haven't really kind of solidified it in our heads yet.
So is this your own algo? That you coded, and it's proprietary?
Yeah, so this we use Quick Strike for a lot of things. We use Bloomberg as well. On the market making side, we've got some algos mainly around execution and modeling, but we start to build up a picture of when, one of the things that a lot of people don't realize is, you great stat around 90% expire worthless, but 95% are delta hedged. 95% of options that are the bulk of them are fully delta hedged at any one time. So the size of the beast is massive. It's not just people buying random calls and puts. And when you start to manipulate that data and look at where exposure is, that's when we can have real, high risk reward opportunities. And that's we're trying this for a year, to see how many customers we can kind of look at and educate them and give them the best possible outcome for what it is that we want to do for 1 year. So we kept the price ridiculously low. It's just, can someone be part of something that's transparent and open and honest? And then we'll see how we are in a year's time.
Have you ever thought or come up with an answer on how market makers, since you are one, are able to pin a market to an expiring strike with the largest open interest so they can just collect?
Well, okay, there's a couple of things to kind of, there's some myth around that, there's some truth around it. So
okay,
from a perspective of if we just look at market making in itself, it's a passive entity. So my job is to provide a two-way price for 23 hours a day, 5 days a week, that anyone can trade on. And I also want to make sure there's the key piece in the end of that sentence, which is to make sure I'm traded on. Because the last thing I want is, if you've got the big order, and I don't want to be the last guy getting filled, because I'm going to get ruined. I want to be first. So there's a fight with market makers to always be first, to start to see where the toxic flow is. So that's one thing. So whilst we're passive, we want to be traded on, so that we can think, shit, we're wrong, and move out of that position. And then as far as pinning to a strike goes, what happens is, the more and more OI that's going on, the more and more deltas are flying around, and the more gamma suddenly becomes available. So if we looked at crude oil as an example, around $65 right now. So there's, every single time it dips, because we've got options that are expiring in a few days, every single time it dips, all of the people that have sold, that are holding those puts start to panic, and they're protecting the downside. And what will happen is, every single day, charm, as it's known, which is the decay of delta, every single day, their amount of deltas they've got to hedge increases or decreases. And this starts to create the pinning effect that we all see. And then slowly it pins to a smaller and smaller range because of charm. And then
are you a believer in, some of the more famous, or at least personalities in the options business, just go with when they see unusual size and trading volume? Is that a market tell for you too, Adam?
So around, not talking about stocks, just sticking to our world of FX and futures.
Oh, okay.
I'm less reactionary to that big type of flow, because it could be something that, at the end of the day, let's give you an example, right? At the end of the day, if I've got loads and loads of short Vegas, I'm short loads and loads of options, I would have to go in and buy far out of the money wings, let's say 5 delta, and I'll buy thousands of them. And then someone said, oh, that's a large trade. It's not really. Stocks is very different. Independent stocks, when big flows going through, I feel potentially there could be some opportunity there, but I'm not a stock trader. I haven't traded an individual stock in 20 years.
Okay.
But the big flows.
Good answer.
Yeah.
So it works in individual issues, but in broader instruments, it could mean a million things.
It could, yeah. I mean, it could be that, you've got a massive short euro position and you're going away on vacation and you're the main fund manager and you just say, buy me some cover while I'm away because I'm slightly worried about this.
Let me ask you this. When's the last time you took a vacation? Took too long. Took it too long to answer.
Yeah, it's true. Actually, when did I? I went to Iceland about a month back. So yeah,
okay, good for you. All right.
I do try and get away. I think clearing your mind, reading books. Otherwise, this job just grinds you down till you're a smooth pebble in the ocean.
Just call me Pebbles, man. Anyway, okay,
cool.
So
let me
what's
keep
next?
going. So I won't kind of bore you with the implied volatility slide. So this was a trade sample that we put out.
No country for gold men. Good. I like that. All right, go ahead.
This is what you get for your $40 a month. So we put this trade out a couple of days ago. We kind of think this run up in gold is done. We were expecting a little spike. We were going to sell into it. I'll show you how we did it. So we send out some background. Here's the chart. Everyone's got that. We looked at the kind of the moneyness curve, and if you look at all those calls there, just everyone's panicking about calls and they're overpaying. And you can see those puts getting suppressed. So we thought that the value play here is looking for a potential sell-off, and puts are very, very cheap to get involved in. So we also looked at the risk reversal. Well, and you can see it is on the far right side there, there's a little spike back up, which I think will get faded back down. So this could be the right time to get into a limited risk strategy. But we wanted to make sure, how's our model looking overall within the macro picture. So we've got, we look at inverse correlation back to yields, and you can see, gold's had a very kind of long term.
That's a great point, because a lot of people are asking me, well, why is gold down with the euro being steady and or stronger? And I said, well, why was gold going up when the dollar wasn't going down during that last, bull move from 1160? So this is a tighter correlation yields than the dollar, isn't it?
Yeah, absolutely. It's a very, very tight correlation.
Right, that's a pearl.
Yeah, and it's a real headwind for gold bulls. So we will always try and back up some macro thinking around the trade. We then look at what's 10-year real yields doing. We've had a recent spike, but consider they've come off considerably, which kind of also solidifies the trade. And then gold implied volatility is just being crushed. So the blue line there, it's into significant lows, even though all those upside calls are the panic area for everybody. Volatility is cheap to get into a trade. So how can we maximize the amount of money we want to make, but minimize the risk, as everyone always asks each other? So we looked at what we call a short ratio spread. So what we do is we sold a 1320 put, and we bought two 1300 puts. Cost us $3. So per one lot was $330 a unit, and we were risking 3.5% of our fund on that trade. And as we move forward, you can see the payoff starts to, if we, for us quite quickly, if we move down to the kind of $270, $280, when you're short a ratio spread like this, you can see on the far right of that chart, our maximum loss is very small, and our maximum upside is unlimited. They're very nice plays to do that, and our customers like them because they don't need much hedging, if at all. And we try and keep the availability of the option for a number of days. You can see this one's 77 days till expiry. We'll be dumping it out way before then, because all of the theta burn, the time decay, happens in the last 30 to 40 days. We'll be out long before then. So it's a very low cost way of getting into a position.
Okay.
That's the trade there. That's the actual order we put through. So that's where it is right now. So we bought it at 3 and it's already doubled in value. So you see it's 6.3 at the moment.
Are you a believer in partial profits?
Yes. So we for us,
like a double and take half and let the rest ride.
Yeah, we do sometimes. I mean, this has made a lot of money quickly. So it's up kind of 50 grand in 2 days.
Yeah.
So we will. There's not much burn in the theta for the next few days. We think gold's got another maybe $10 on the downside down to the 1280s. We'll take some off then and lock it.
Under there it looks like 1250, 1240 to me. Maybe even 1220. Exactly. What do you think?
Yeah. Exactly. And I think after that it's kind of runner. So it's really difficult sometimes. It's not a bad thing to kind of finish the slides on and wrap up on, is that I've struggled with trying to be as tight and as accommodating to trading with all of the customers that have joined to how I would be if it was just me and Hugh, because I would hedge more. I would probably we would maybe take more off quicker or run more further. But it's really interesting when you're posting something that you're trying to protect lots and lots of people that are involved in something, that have all got different account sizes, that have all got different ideas. It's a really weird feeling that it's frustrating as well as kind of quite liberating and cathartic. It's a weird thing. For me. There's a few trades we've had. Would I have got out earlier? Yes, but I know there's some higher trade costs for other customers. So that's a weird thing for me to get my head around at the moment.
Okay. Well, good luck on that. If you want, let me coach you. Do advise what you would do for yourself to others.
That's every single time.
It's playing with your head. It's playing with your head.
Yeah, it's
because don't worry about leaving money on the table. Here's what I say: you can't expect perfection at the craps table.
Yeah, so true, so true.
Give up trying to be perfect.
Yeah, and that's certainly what we're trying to do. Is that if we're going to do it ourselves, we're going to do it, and we can't have. We can't. If someone's got a small account and they're much more nervous,
just a little advice from an old man, Adam. And when I first started in the business, a veteran pulled me aside and said, "Kid, this is a tough way to make an easy buck," and he was right.
Yeah.
So anyway, just that, because I know, having moderated rooms and facilitated with traders, I used to feel the pressure of I have to find a trade for these people, and you know what, we're paid to wait, and if a trade is compelling, you don't have to scan the screen forever. It'll slap you right in the face. Yeah, and that's very true. And I think we're new doing this, and I think one of the things that we've really stopped doing is, if there's nothing on the cards, we're not doing it. And I am my job is to consume the models the same way as I'm consuming my own cash. That's right, buddy.
And that's frustrating for them sometimes, but for us, we put 1 million of my money into the fund that we're putting this trades into. So I kind of think to myself sometimes, there's a guy paying $30 who might not like the way we're doing something, and my wife said to me yesterday, "Why are you so worried about 3 people that might not like what you've done? We've just made 60 grand."
Yeah,
and that's what you've got to. You're right. You've got to stay true to your own thinking and don't change from that. And
yes.
And that's the most important lesson.
The Bible calls wisdom she. All right, that's all I'm going to tell you. So start listening to me and her. And Hugh, it really was great. Anything you want to wrap it with and show the people how they could follow up? And
well, I mean, if you just we're on Twitter at MacroHedged, macrohedge.com, the website. So feel free to go to that. It's hopefully we've got the 2 products. We are expanding, but this has been really good, Dad. I've really enjoyed it.
You know what? It really was great meeting you. I'm so glad I reached out, and I'm so glad you pressed me to get you in sooner. And,
Yeah.
you know, I just really believe that if someone wants to learn about options, really, which is a intricate business because you have to know all the Greek, right? So, you know, most Americans could barely speak English. So I have a couple of partners in Greece that would understand theta, gamma, whatever, all delta, all the Greeks, but really can tell that you're a pro, Adam, and like it or not, you're now my trading warrior brother.
That's really good. I've really enjoyed this. There's been some great questions back, and I appreciate that.
And
It's
yeah,
nice,
I hope
to talk to someone that's been in the trenches for a long time and knows the pain and the good side.
May pips rain down on you and your partner and all your subscribers. And let's get back together and keep in touch. Really appreciate you spending your most valuable currency with us today, and that is time, because money comes and goes, and time is gone forever, buddy.
Yeah, absolutely true. Amen to that. Thank you very much.
You're very welcome, everyone. That's Adam. You want to learn how to trade options? Here's a great resource for you. And you're very welcome, Hamid. Everyone have a great weekend. Remember, you're welcome, Alina. Don't just count your pips, count your blessings. Have a great weekend. Do your work and be ready to execute next week. Adios. Thanks again, Adam.
Cheers.
And we'll see everyone on Monday. Adios.